Good afternoon, members of the media here in Washington, and to those joining us online from South Africa and elsewhere. Welcome to the final press conference of the finance track under South Africa's G20 presidency. Over the past 2 days, finance ministers and central bank governors have been meeting here in Washington, D.C. for the fourth meeting of the finance track. To the colleagues, we have published the chair's summary. It is available on the South African Reserve Bank's website, reservebank.co.za, and also on the National Treasury's website, just for ease of reference. For members of the media to also note that the Minister of Finance of South Africa could not join us for this meeting as he had other commitments at home. But let me introduce our panel for this afternoon, who will be taking us through some of the achievements of the finance track since we took over the presidency and some of the discussions that we had over the past 2 days. To my immediate left, we have the Director General of the National Treasury, Dr. Duncan Pieterse. Next to him is the Deputy Minister of Finance, David Masondo. We have the South African Reserve Bank Governor, Lesetja Kganyago, and the Deputy Governor, Rashad Kasim. I will now allow for the Deputy Minister to give us some opening remarks, and following that, we will then open it up for questions. DM, over to you.
No, thanks, Mahlatsi. I'll read the media advisory that we have issued, because we assume that not all of you have the copy, and particularly the viewers at home. And it reads as follows, and thereafter will be under the dictatorship of Mahlatsi on how we take the conversation forward. So the statement reads as follows. The fourth meeting of the G20 finance ministers and central bank governors, chaired jointly by myself and the governor of the South African Reserve Bank, Lesetja Kganyago, took place on 15 and 16 October 2025 on the sidelines of the IMF and the World Bank annual meetings here in Washington, D.C. This was the final finance ministers and central bank governors meeting of the South African G20 presidency. As a key legacy of South Africa's presidency, ministers and central bank governors agreed to launch the G20 Africa Engagement Framework. This framework strives to ensure consistent engagement by the G20 with key impediments to growth and development in Africa for the next 5 years. It complements existing G20 initiatives, such as the Compact with Africa. Ministers also signed up to the first ever G20 ministerial declaration on debt sustainability, which signals the intent of the G20 to do more to tackle unsustainable levels of debt along the rising cost of capital, particularly for African countries. The meeting delivered constructive discussions on the global economic outlook, the macroeconomic stability, the international financial architecture, and financial sector issues. The meeting also received an update on the work of the Africa Expert Panel. Further details on the discussions are recorded in the chair summary of the meeting, which is now available on the G20 website. The chair's summary also contains a list of deliverables achieved under the South African G20 presidency within the finance track. Amid rising geopolitical tensions and fragmentation, South Africa prioritized global cooperation and development, with a special focus on Africa. Our presidency theme, solidarity, equality, and sustainability, reflected the current global context and the priorities of the previous 3 developing country presidency, that is Brazil, India, and Indonesia, which focused on issues critical to the global south. We have emphasized the need for global policy responses that reflect the lived realities of emerging markets and developing economies, including low growth, constrained fiscal space, rising debt service costs, and limited access to long-term affordable capital. Our focus on Africa permeated the finance track, where significant progress has been achieved, advancing the multilateral development bank roadmap to make them bigger, better, and more effective for developing countries. Members also adopted the G20 declaration on debt that aims to improve debt sustainability and commit to engage with borrower countries while enhancing their agency. Work with the Global Sovereign Debt Roundtable provided additional technical input and further strengthened Africa's voice. For South Africa and other developing countries, the developmental commitments made during the first cycle of developing countries' presidencies must be carried forward beyond 2026, ensuring the G20 remains relevant and effective in a divided world. The South African presidency has also advanced discussions on artificial intelligence, examining it from both a regulatory and a macroeconomic perspective to understand productivity and growth implications of harnessing technology and AI. There's broad agreement that further work needs to be done. Our financial sector discussions highlighted both the transformative potential and the risks associated with innovation and AI. Cross-border payments was a key priority this year, and we have collectively reaffirmed our commitment to effective implementation of the G20 roadmap for enhancing cross-border payments, as well as appropriate further actions as necessary to deliver the roadmap's targets. Indeed, we are slowly making progress towards the quest for cheaper, faster, more transparent, and inclusive payments, particularly in sub-Saharan Africa. Over the year, members advanced several other areas of important work across a number of groups and work streams, which will improve global economic cooperation. This included advances in financial inclusion, moving consumers from access to usage of financial products, continued progress in sustainable financing, and multi-year sustainable finance roadmap tools for expanding quality infrastructure investment, including cross-border infrastructure toolkit and the related Ubuntu initiative. There was productive engagement on coordination between finance and health ministries and continued coordination on international taxation. Finally, members welcomed a review of G20 finance track processes conducted by the South African presidency, ensuring that the G20 finance track remains the premier forum for the global economic cooperation. The G20 continues to play an important role in fostering stability, inclusion, and sustainability in the international system. We are confident that the work carried forward from this presidency will strengthen our shared efforts to build a more equitable, resilient, and prosperous global economy. South Africa will host the G20 Leaders Summit in Johannesburg in November, and we're looking forward to seeing many of you there. Thank you.
Thank you very much, Deputy Minister. We will now open it up for questions. For those in the room, if you could put your hands up, a roaming mic will come to you. And then please just state your name and your designation as well. The journalists that are online, they can use the chat function, and I will read up the questions, and then I will give the Deputy Minister the powers to decide who answers those questions that come forward. Thank you. Thank you.
Thank you. My name is Nayan. I'm with Indo-Asian News Service. I have a question regarding US-China trade war, which is underway right now. US Treasury Secretary Scott Bessent yesterday said that there will be a global wholesome response to Chinese export controls on rare earths. My question is that did the US side raise those concerns in the G20 meeting? Sorry, should I continue? So my question is, did the US side raise those concerns in the G20 meeting, and what is South Africa's position as the chair of G20? Thank you, Chair.
All right, DM?
DG, do you want to take it?
Well, thank you, DM. Well, I think the question was really about whether that was raised in the context of the G20 discussions, and the short answer is no. Trade was, of course, discussed in the Framework Working Group itself, and the outcome of those discussions are reflected in two places. One in the Chair's summary that you have in front of you today, in the Global Economic Outlook section, as well as in the communique that was agreed upon in Durban. And I'll refer you to the fourth paragraph of today's Chair's summary to give you a sense of how those discussions ended up. And the key point I would highlight here is the fact that the line that talks about the way that we need to, A, address excessive imbalances throughout the world, but do so in a way that contributes to an open global economy and without compromising sustainable global growth. And then both this Chair's summary as well as the declaration from Durban earlier this year spoke about the importance of the WTO to advance trade issues and acknowledge that the agreed upon rules in the WTO are integral as part of the global trading system. So if you read through the language that you find in this Chair's summary, that will give you a sense of how those matters, to the extent that they were raised in our discussions, were resolved by the G20 members through their deliberations.
Okay, let's take two at a time. As I will take the gentleman over here and then the lady in front.
Hi, my name is Magnus Sherman. I'm with Octus in London. I wanted to touch on the point about preferred creditor status. Some of the current African debt restructurings are being held up by certain African institutions claiming preferred creditor status. Was that discussed during the meetings, and are we any closer to a sharper definition of what constitutes PCS?
Okay.
Hello, I'm Fung Skovgaard from InvestGain Media from London. You were talking about technology and innovation. And we talk a lot about AI, but I would like to understand whether you have mentioned blockchain. Blockchains mean, I'm referring to digital bonds. It's a way to raise capital for countries and also to help G20.
Okay.
DG Shad, you want to start? Yeah, blockchains. Yeah.
Yeah, look, I think that what is important about the G20 is an issue that is relevant for the G20 community that has cross-border implications. So one of the reasons why we have a discussion at the G20 on financial innovation is because there are two facets to it. The first is that financial innovation has cross-border implications. We know that with stable coins, for example, what you do in one country can have an impact on the other country. The second issue is we all get worried about regulatory arbitrage. So if one country introduces a regulation that's slightly more developed than the other, they're different, you want to be able to ensure that you don't have, you don't contribute to illegal capital flows and so on. We're not committed at the G20 to a technology choice. So blockchain is very important. I think the G20 has a very critical discussion of how should we globally think about crypto assets? How should we globally think about stable coins? And it is a forum for different countries to air their views. Some are more enthusiastic about introducing legislation now. Some celebrate the positive side. Others may celebrate, may raise caution about the negative side. So the conversation is a broader conversation on financial innovation. Of it. Blockchain would be a part of it, but I don't think we get into the details of blockchain. It's more the overarching concerns and benefits about financial innovation. It's a follow-up there, I think.
Okay, can...
Not about stable coins, not about cryptos, not about coins or anything, just doing digital bonds so everyone can, because we are talking about saving. Actually, right now we have a case study as Prince Albert in your country privately, and it is working, and that's what we try to hear your view on how to replicate. Because we have a framework, we have a case study. So we are talking about digital bonds. We are not talking about cryptos or coins.
Thank you.
Yeah, that is quite a narrow topic. We haven't really discussed it. As I said, it's been a more overarching discussion on innovation. Thank you.
Okay. As part of our modernization, we had run some tests. We had experimented with using a blockchain technology in the payment space, where we were able to tokenize the payments, and we proved that we could actually settle the volume that we would normally settle in a day within an hour. That volume would be settled. We took that project further, because you talked about a digital bond, and we tested it with the South African Reserve Bank debentures, where we tokenized the debentures, digitized them, and it was proved that it could actually be done fast. But for this thing to fully work, you actually needed to modernize the entire payment system. And so we are busy with the payment ecosystem modernization. It's a big project which is preceded by the establishment of a payments utility, which was formerly known as BankServe, which is now Pay Inc. So you're going to be using that. So in that ecosystem, over and above the utility, you're going to be introducing a digital ID and all of that stuff. So your question was very narrow. It was about a bond. We have tested this with payments. We have tested it with debentures. The next phase was testing with the treasury bills of the treasury. But we are doing an entire payments ecosystem modernization.
Yeah, there was a question which requires DG's answer. I think it was from you.
Yes.
Yeah,
Matt.
Yes, happy to come in on that. So the question was about whether the issue of preferred creditor status was discussed at all during the course of the presidency. And it came up in a few different areas. Number one, of course, within the context of the common framework for debt restructuring. That's an issue that was discussed there. And just to alert you to the fact that we do have a few, if you go to the annexure of the chair's summary, you will find some of the reports that were produced as part of the outputs of the G20 presidency for South Africa. And one of those were the fact sheets for the common framework for debt treatment, where we did a few case studies where these issues were raised, and I think the important point to make there, and sorry, I should add that there was also a side event on private creditors' involvement in common framework debt restructuring that was done with the Paris Club earlier this year as well. And I think the key issue to mention there is that from our perspective, as we say in the statement as well, the common framework remains the key vehicle through which these kinds of debt restructuring happens. It also remains the mechanism through which issues such as the preferential creditor status is discussed and how that is managed. And I think the other point to make is that we are heartened by the progress that the common framework has made over the last few years in terms of its ability to resolve these debt restructurings a lot more quickly than was the case with the first few. If you look at the experience of the latest countries versus some of those who came very early on, like Chad and others. So certainly there has been progress. It remains on the agenda of the G20, and it remains a discussion for further refinement, including how preferential creditor status is handled within the context of the common framework.
Okay, I've got a question online, and it's from Stephanie Sung, Chief Correspondent from Tax Notes Today, International, USA. What was discussed regarding the Pillar 2 side-by-side tax proposal put forth by the G7, and how confident are you that an OECD inclusive framework agreement on the proposal will be reached by the end of the year?
Do you want to take that, DJ?
Yeah, well, it's going to be difficult for us to anticipate whether an OECD agreement will be reached before the end of the year. That is up to the members of the OECD and probably better directed at the OECD themselves. The OECD has also been a key partner for us in the tax discussions this year. But one of the deliberate steps we have taken is to bring together both the voices of the OECD as well as broader voices in the form of pulling the UN agencies closer to the discussion. So all I would say is at this stage it's early to anticipate whether that agreement will be reached, but certainly those discussions are going to be taken further by the OECD members.
Okay, we've got two more, about 6 minutes to go. Can we take the question in front and the lady at the back as well? Yeah. Okay, we can start there and come there.
Okay. Thank you very much. My name is Kemi Oshikoya with the Africa Bazaar magazine. My question to you is regarding how is the G20 addressing credit rating biases that raises African borrowing cost? And the other part of the question is what reform to multilateral development banks is the G20 under the South Africa presidency championing to unlock more concessional and blended finance for Africa? Thank you very much.
Okay, who's taking that one?
Okay, I can start. So I think on the issue of the credit rating agencies and the voice of African borrowers in particular, I think there are three points worth highlighting here. The one is that you will notice that in the Ministerial Declaration on Debt Sustainability, there's a very particular reference to enhancing the voice of borrower countries. It is an initiative that's recognized both within the context of the G20, but also, as you would know, there's a global initiative underway led by the UN, Egypt, and Zambia to create a platform to raise the voice of borrower countries in these negotiations. Secondly, the issue of credit ratings has, of course, also been raised by the G20 Africa expert panel. So if you look at the report that was submitted by former Minister Trevor Manuel, there are some very specific recommendations in that regard, and they draw on some of the literature that demonstrates the biases that do exist there. From our perspective, through the Africa Engagement Framework, which was adopted and which the Deputy Minister spoke about earlier, where G20 members will, for the next few presidencies, have an opportunity to choose from a menu of policy options insofar as they relate to Africa. One of those is, of course, the cost of capital. And we are certain that that is an issue that will be picked up by one of the upcoming presidencies, where the kind of issues that you've raised, both on the role of credit rating agencies, enhancing the voice of borrower countries, and also extending concessional finance via MDBs will be taken forward as part of the G20's agenda. And I'm sure that the Africa G20 expert panel, whose work will continue and where all the key Africa agencies are represented, UNECA, AFDB, AU, and so on, will also ensure that they prioritize this in their work going forward. Thanks.
Okay.
Okay, Eden Harris, Financial Times, the banker. My question is for you, Governor. What is South Africa doing to protect South Africans from bad actors who prey on the banking institutions that basically are vulnerable to hackers? So, like, what are you doing to protect your consumers from hackers who prey on developing countries?
Okay, I think that just to conclude on what the DG was saying about the rating agencies. There is a global standard set by IOSCO that is supposed to regulate the conduct of the rating agencies. And so in evaluating the behavior of the rating agencies, you've got to look at that in that context. The second is that rating agencies have got to be transparent in their methodologies. And if they're transparent in their methodologies, I say, at least I could speak from the South African perspective, we are able to take their methodology and take the data they are using and see whether we are able to replicate it, and we can actually engage them and challenge them based on their methodology and say that your rating is wrong. And so if you were to look at South Africa now, and you look at the reports of the rating agencies when they downgraded South Africa in 2017 and 2020, their trajectory was that debt to GDP in South Africa will reach 94%. In the case of one agency, it said that we might actually reach 100. 8 years later, we are at 76%. So they were wrong. So you need to be able to engage with them on that basis. Now, not all countries, especially developing countries, have got the ability to take the methodology of the rating agencies, test its robustness, confront the rating agencies with the data. And I can tell you now, we're capable of saying, based on your methodology and the data that we have, your rating is wrong. This is what we think our rating should actually be. And that is the power that the borrowers actually need. Now, for many of the developing countries, they would not have that ability. And important here would be to build the capacity of the borrowers to be able to engage in that manner. And if they can't engage directly, whether you create capacity that can be availed to the borrowers so that the borrowers would be able to engage in that manner. Question about the protecting consumers against hacking. Hacking will take place. There are bad guys out there. And the issue of cybersecurity had become very important. And through the structure of the BIS and the Financial Stability Board, we have got the cybersecurity reporting task. If any one of us has experienced a cyber incident, we have got a mechanism of sharing that information and seeing what lessons are learned and how you actually respond to that. It then becomes the responsibility of the individual institutions to put in place checks and balances and controls to protect their customers. That you will be hacked is a given. You can put all sorts of defenses. That you will be hacked, it will happen. There will be a hack. The question is, when it happens, how quickly are you able to respond to that? And I'm saying this decidedly because there had been advanced economy agencies that had been hacked. So that is what you are going to be faced with. And on the consumer side, it is also very important that consumers are actually informed and equipped to be able to engage. Because in many respects, it is not so much that the institution got hacked. It is because the consumer didn't know what was the right thing to do when approached or tricked into some vulnerability, and they click on the wrong link, and you end up with a situation. So, globally, we need the cooperation as policymakers, and country-specific. You need legislation that would govern this, and the institutions themselves have got to put mechanisms in place to do this. And lastly, the consumers need to be made aware of what the vulnerabilities are and how they can protect themselves against that.
Unfortunately, we have run out of time, but we do have our principals with us. If there are any specific questions that you want answered, just come to me and we'll try and arrange it. Thank you very much, ladies and gentlemen, for joining us, and we do look forward to seeing you in South Africa in November. Thank you.